Hey guys, welcome back for your weekly update. First of all, sorry that I'm one day late for my video this week. I really couldn't do the video yesterday. I was in front of the Bitcoin chart and I couldn't keep my eyes open. I had to go to bed. And I slept for 12 hours, by the way, which is amazing for me because I'm never able to sleep more than 5 or 6 hours. I just wake up every day after 5 or 6 hours and it's just so annoying. So yeah, I'm sorry that I'm one day late, but at the same time I'm happy that I was able to sleep for 12 hours for once. Anyways, let's get into the chart. So we finally had a correction after the last wave up from the 33 low here. So we had a correction. Right now the price is very close to the 61.8. Actually it started bouncing on it and it's pretty much there, like very, very close. You guys probably know this already, but if you don't know, 618 is the most important number, not for trading, but in the universe. It doesn't even have anything to do with trading and charts. The 618 is the golden ratio, which is everywhere in the universe. It's in the ocean, it's in the stars, it's in everywhere around you. Right now, if you have an iPhone, that number was used to design the iPhone. It's used to design credit cards. It's used to design buildings. It's in the human body. We all have it. Like, it's everywhere. So if you don't know this, you probably know this. Everybody knows this. But if you don't know, just Google the golden ratio and you'll find the reason why we use these numbers in trading, which have nothing to do with trading. So anyways, not only the 618 is the most relevant of the Fibonacci levels for trading, we are also very close from the 20-month moving average again, which I have been showing in a lot of videos recently, because it's not that often that the price is at the 20-month moving average. And this is a very strong moving average. The price usually won't go below it like there was nothing there. It will, even if the price is, even if the momentum is bearish, even if it will break below it in the future, it will usually bounce on a monthly scale. It will usually bounce hard here before, or even maybe not that hard, but it will usually bounce here and stay above it for a few months before breaking below it and capitulate. So I guess the short message is this is not time to sell if you are thinking about selling. I saw a comment, I can't remember if it was on some YouTube video or somewhere in social media, I can't remember now. But someone said that they were still, he said something like, I'm still holding, I'm not going to sell right now because we could be bouncing here. But if the price goes below, I can't remember the price, but it was very close to the price that is right now. He said, if it goes below this number, I'm selling, I'm out. And I was like, really? Like after a 50% correction, after we are very close to the 20-month moving average, and after we have signals, strong signals in smaller time frames, that 33 was probably the local bottom, meaning the end of the downswing and the beginning of the upswing. There's many signals that I have explained on previous videos, so I'm not going to explain them. I'm not going to show them all again in this video. But there's many signals in big and small time frames signaling that 33 was the bottom. So, and after Bitcoin went down 50% from its all-time high, you're really thinking about selling if it goes lower than this? I mean, I wouldn't do that. So long as the price is above 33,000, which is the local bottom here, I'm still gonna call this the bottom. Unless this is broken, unless the price goes below 33,000, I'm gonna still say this was the local bottom and the beginning of the upswing. Now, if we get to the 78.6 Fibonacci, which is at 35,500, if we get there, then breaking 33 becomes an option, becomes a real option. Right now, we are at the 61.8. For me, right now, saying right now that we're probably going to go below 33,000, it's not even an option right now. We're at major support, which is a 61.8, and it's also the 20-month moving average. So for me, it's still not an option going below 33,000. Now, if we get to the 78.6, that's when things become more bearish. You know what I mean? Yes, we're still higher than the previous low, but things start to look a little bit more bearish. So breaking the low becomes more of a real option, and not only for Bitcoin. It's just a general rule in technical analysis. Even then, if the price was going to get to the 78.6, or even if it was going to break below 33,000, me personally, I would not be selling. I would, if that was the case, I would, below 33,000, I would start assessing what's the next major support to double down on my last buy. So for me, for example, I'm not, like you guys know, I've been holding Bitcoin since forever, so I don't need to be buying and selling. But if I was going to buy now at the 61, let's say I buy now at the 61.8, or I even imagine I bought a little bit at 50, and I bought more at 61.8. I would be just holding. I would be happy holding here after a 50% correction. Only if it goes below the 33, then I would start to assess what are the next major levels of support. Not close to 33,000. I would try to find levels way lower and double down. So I would be buying double than I bought here at the level that is right now. And that's, again, another basic rule for trading. It's not something that I'm making up here now. That's what you do in trading. Unless, okay, let me rephrase this, because that's not going to work for everyone. If you are doing the very short-term trading, and by very short, I mean if you are taking one trade a week or more, then no, then you need to use your stop loss and you are out of there and you move to the next one, right? Because you're trading all the time. If you're doing this for a living, it means you're trading all the time, every week. You just take your little loss, because if you do that, it means you're buying now. If you're doing the very short-term trading, it means you have just bought the 61.8, and you would have your stop loss below this previous low here, and the local low. Let's go to smaller time frames. If you're doing the very short term, let's go to the 4-hour chart, and that's your previous low here. You see, this is the previous local low, or this one is the same thing, right? So you would have your stop loss right here, actually a little bit below. You need to give a little bit more room just in case, but somewhere here, right? Your stop loss is just below here. So you would take this loss because you bought the 61.8. You take your loss of 3.5%, and then you move to the next trade. But if you're not doing the short-term trading, if you are holding, even if it's for 1 month, even if you take in average one trade every month, okay, or less than that, it means a minimum 1 month holding, I would not be selling Bitcoin or Ethereum. I wouldn't be selling neither Bitcoin or Ethereum at this after the 50% correction that they recently had from the all-time highs. I would be doubling down somewhere, which I don't know right now, somewhere if they break the previous local low here at 33. If this was to break down, then I would try to find an entry way lower than this. if I can estimate it. As of right now, we are still far from this low, so that's not something I'm even going to think about right now. But I would, if I was holding for the medium to long term, I would be very happy having bought the 50 and the 61.8, and then just wait. If it goes only a little bit below 33, you keep holding it, just hold and wait until it goes up. And if it really goes like way down, if we are indeed in a long-term bear market and we go all the way down to 20,000, if we are indeed in a long-term bear market and we go down all the way down to 20,000, to the peak of the previous cycle here, then if it really goes that low, then you double down. You double down your previous buy up here, because and then again, this is not something that I made up. This is just basic rules for trading. If you bought here the 61.8 and it goes all the way to 20,000, you're in a big loss. It's not a 1 or a 3% loss. It's a big loss. So if you want the fastest and most efficient way to make your money back is doubling down. You always buy double than you bought the previous time. So it means that if it goes to 20,000 and then it bounces hard, it only has to bounce halfway from 20,000 to your previous entry at whatever the price is right now, at let's call it 40,000. It only has to go up halfway, and you'd already break even. You're already not even in losses. So you have time to, during all this time, you can reassess if you want to exit the trade for a break even. Maybe you will exit when it touches your first entry, and then you are already in the profit, which I would never do that with Bitcoin or Ethereum. I would just hold it. But I mean, for other charts, for other positions, you have room there to reassess if you're still bullish, if you are bearish, whatever, But at least you have room there to make your money back before you exit. You don't exit all the way down. After, like now, for example, after it retraced 50% from the all-time high. So that's ideally how you do it. For me personally, like I said, I don't sell Bitcoin, and I wouldn't sell Ethereum either. Basically never. But for altcoins, it's different. I use stop losses most of the time for altcoins. It will depend also on every specific chart. Like if something is really, really extended in the downside, I'm not going to be using a stop loss. I would try to catch the next major support and then double down so that I can exit for a break even or for a profit. I'm trying to do another HODL portfolio, like the one I did in 2019, if you guys remember, where I picked 10 different coins to hold only through 2019, not forever. The only thing I hold forever is Bitcoin, Ethereum, and Bitcoin Cash. The rest, I'm not going to say I'm going to hold it forever. So I did it for 1 year in 2019, and I'm thinking I want to do the same for 2022. So I'm waiting to see what happens, with this correction. But I did enter one altcoin. Okay, so for this portfolio, I want to do between 5 and 10 coins. Of course, Bitcoin and Ethereum will be there, will be on the portfolio because they are a hedge. If everything goes down, Bitcoin and Ethereum are going to be the ones that go down the list. But of course, if everything goes up like crazy, they will probably be the ones that go up less because their market cap of Bitcoin and Ethereum is just so much larger that it takes a lot more money to move things up or down. So they have to be there as a hedge, like just in case things go down, but you don't want to have a lot of those either because you want to maximize your gains as well. So I want to have Bitcoin and Ethereum, and then in total between 5 and 10 coins. I entered one and one only because that's what I say. If things go down, you don't wanna enter with everything at once. You want to do it slowly, right? You use only 10% of the money that you know that you're not gonna need in at least 1 year, and you start using 10% of it. So it's just so small. Like you need to scale in, and then ideally scale out as well. But I'm saying this because I entered one coin. I mean, I'm not going to share it here because I'm doing this for private members, so it wouldn't be fair that I share everything here on YouTube as well because they are actually paying. So I entered one, but I entered it, when I entered it the other day, I entered at the 50. I entered with a very small amount at the 50% correction. Relative to the local low, so just like I have it here, but in the other coin. So I had a very small buy at the 50%, and then I already had a buy to double down my first buy at the 61.8. That one, I think that buy have probably been hit today. I'm not sure because I didn't log into the exchange yet, because I just did it very recently. But I already, when I did the first buy, I already had the second buy at the 61.8 for double than I bought the first time. I shared that for members right when I was doing it, right when I did my first buy, and already had my second buy for double the amount relative to my first buy. And I also have a stop loss because, like I said, altcoins are different. Bitcoin and Ethereum I wouldn't sell, but altcoins I treat them different, and especially if they are extended in the upside. So yeah, that's how I do it. And then I wanted to talk about this fear and greed index. I'm not a big fan of this tool, but man, it's been spot on lately. Like I have to admit, this has been spot on. Look at this high here when the hype was very high. It was the 9th of November, and Bitcoin, the top, the 9th of November. If you see the date down here, like, I mean, spot on. The bottom, 21 of July, 29 of July, look, like, I mean, really, really spot on. So right now we are at 25. This is right now extreme fear. Yesterday was even lower at 20. So it bounced here for one day, but I mean, I guess this is not something you want to look like day by day. Like you need to give it some time here. But like generally, generally we are on the extreme fear. Like all this here was a buy according to this. Actually, let's see. This goes from the 21st of May. Let's say 20 of May to 20 July. Okay, 21 May to 21 July. Let's see. Look at this, 21 May to 21 July. I mean, exactly. I didn't see this before. It's the first time I was looking at this. But because it's exactly all these parts, which was actually a buy, it was a buy area, all this part here, when people was probably wanting to sell because after such drop and after staying down here for so long, I would say the sentiment was very bearish, and actually I can see it here in the fear and greed index. So we are at those levels right now. So I guess my message has to be buy the fear. You need to buy the fear and sell the greed. And right now we are in the fear area. And so if this was to break down, then I would imagine the fear would go like really, really go to the all-time lows. And that would really be the place to actually double down, not sell. Like right now is not the time to sell anyways. it's time to wait. And if we break the major low here at 33, then you start thinking about doubling down somewhere, somewhere down, somewhere below 33. Because guys, reality is, and not in every trade you're gonna spot the perfect bottom or the perfect top to exit. Like, that's just not how it works. That's just not real life. So ideally, you scale it, you scale in and you scale out. I hope this is clear, guys. Thank you for watching, and I'll see you next week. Bye.